Friday, January 13th, 4:36 p.m. New York time. The U.S. stock market's closed. Recap of my day trades. First recap would be on the day trades I took with the SPX. That's the cash index for the S&P 500. And I used the options. You're able to choose the stock ETF, SPY, or the options on the SPY, same as the options on the SPX, or you can trade the ES. Well, because this I was trading after 9:30 a.m., I choose the SPX because the commissions are lower. The exchange rates are lower. Yeah, there's different fees. You have your broker, you have the exchanges they trade on. And the liquidity is better on the options on the SPX. So here, this is a desktop trading platform. I have 4 grids open. From the right, I have the daily grid on the SPX. And it closed green. Yep, closed green. Big green bar, pretty much big body. See? Close higher. Higher high, higher low. Okay, let's zoom out. This is one of the grids. This is the setup I have that up, set up when the market's open at 9:30 for this financial product when I trade it. Then the second grid here is the S&P 500 Futures /ES. I have the 4-hour candle bars on. I can see a lot more content here intraday. Yep. I have my supply zones up here where the prior sellers were, green zones where there are prior buyers, also my midpoint. Oh, I should do some house maintenance here because this 4-hour candle, when it got done, it actually closed over this midpoint. Do some house maintenance. Simply add this to 13. There we go. Then this grid here, I have the SPX. Again, that's the S&P 500 cash index, 9:30 to 4 p.m., 30-minute here, and the 15-minute here. So when the market opens, I typically have this just to want to see 2 days, just 2 days I'm looking into it. Obviously, when the market opens, all this is not done yet. And then here, for the 15-minute, I just need to see a day and a half. So I can see some part of the prior day, but again, when it opens, I'm only seeing this. The blue horizontal lines, let's open this one up. I have labeled the prior day's high and low. That's the purpose of that for me. And then the yellow horizontal lines at 9:30 a.m. when the market opens, I like to identify the 8 delta on both sides, label them, and put them on here. What is the 8 delta? 8 delta is the 2 standard deviation, where 1 delta is a 16 delta. So 1 standard deviation is 16 delta. 2 standard deviation is the 8 delta. Yep, the lower the delta, the further away. Well, today, at the end of the day, intraday, the 8 delta up here was tested, and it closed above it, where the 8 delta on the bottom for the put was not. So let's do some more house maintenance. Let me move these up. So come Monday morning, which I won't be trading because it's a holiday, let's move these up to represent the new, actually do it this way, high. So when I do start trading Tuesday, I already have them. Move that one. Label this one high. Day. Daily. High. Now the bottom one. And I also have these queued in here. So when the market opens, I'll just have to update at 9:30 a.m. I'll just have to update the strike, whatever the 8 delta is, and change this over and add some stuff in here. So going back here now, zoom in. I'm just looking at the 2 days of content, 2 days of data. I also like to have this drawn to a scale where I can see at 9:30 a.m. These 2 8 deltas I labeled. Obviously, this content again is not here yet. It's just that first one. So let me zoom out now so you can see a little bit more. Oops. And then here being the 15-minute, where I'm looking for the trigger, the entry. When this opens, let's show you in here now. Zoom out. Well, this green candle, zoom in, was where we closed on Thursday. And the opening at 9:30 a.m., we gapped down. Again, for me, gaps in the morning. If the gap gets filled, that's a potential trade the other direction, where if a gap does not get filled, that has a bias leaning the other way. I'll explain that again. Market opened, we gapped down. I'm sitting in my hands waiting for a trade. And momentum didn't continue going down. Momentum went up. Again, the gap's here, right here. So we didn't gap down from the total trading range, understand? We just gapped away from that last 15-minute candle bar. Different kind of gaps. There's a gap when you gap either above or below the prior day, or here we just gapped again away from that last 15 minutes. That's why, again, I'm looking at this content here for 2 days. Even though we did take out that high of that 8 delta, which is bad, so I didn't trade that. Let's zoom in, or sorry, zoom out. I did a bullish trade. Yep. At that time, my entry was at 9:46 a.m., 09:46 a.m. for you civilians. That just happened to be a 17 delta. In each spread, I had collected $50. When I was looking at this, let's just do it on the two of them. The 30-minute and the 15-minute. As soon as I saw this go down, I start seeing this big wick forming down here. Let's zoom up on here too a little bit more. Oops. There we go. So when this big wick was forming here on this first 30-minute candle bar, I was like, oh, okay, that was part of these first 2 candles. And that first red candle got done. Okay, I liked it. Saw a big wick on the bottom and pretty much big wick here. I still didn't enter. Then that second 15-minute candle, when that was forming, it was an inside candle. Still sat on my hands and waited. I waited. Then my entry was at 9:46. So when that got done and closed above that first one, I like the 2 tails that formed there. Again, 9:46. That means my 2 first 15-minute ones were done, and first 30-minute candle bar was done. I liked it, so I went long. Well, that was good. When I went long, the momentum went real fast to the upside. My trade got closed at 10:01. Yep. So it was about 15 minutes in the trade. Very nice. Got done. Closed the trade. So in hindsight, yes, I was bullish. I used the option spread. It was 2 strikes wide. That margin is $500 for each spread. Again, they were options expired the same day. Now, in hindsight, again, if I stayed in the trade to expiration, I would have made max profit because I was on this side, not that side. Max profit being the credit of $50. Nope, I put working order on to close them for 50%. So I only made half of that for each spread. I'm happy with it. I didn't lose. Thank goodness. So that's one trade. Let's go to the next one. Yeah, I also did one, I think I did one that, yep, I also did one that prior day too. Same thing, both of them were bullish. But again, just showing you the basic entry, how I was doing this. Let's go on to the next. This is using the S&P 500 futures because I was trading before the cash market opens. This is a little different because, again, EES trades on a different exchange, but it trades nearly 24/7. So again, instead of using the SPX charts, they're all the ES because I'm strictly trading the underlying product or the futures. The ES options, I'm then trading options bought on the ES, but the point is the cash markets closed, so there was no concern for me to look at that. I still want to see the daily, but I was using the ES. So there's a daily for the ES. Here's the 4-hour. Let's zoom in. Just look at these three grids. And let's queue in my trade. Short 0 DTE. I'm doing this too when I'm looking at this. I'm seeing the current day and the prior day. And when I'm here, I'm also looking at the 15 minutes, but I don't need to see 2 days. And I'm trading it again before the market even opens, the cash market. Let's zoom in. Zoom in a little bit more. And show you the trade. There we go. Zoom in some more here. So this was bearish. Yeah, the same thing. In the morning, I traded bearish on the S&P 500 futures. And then when the cash market opened, I was trading bullish. Made profits on both sides. That's a beautiful thing. Thank goodness. Excuse me. So this trade was placed at 05:48 a.m. And I closed it at 7:20 a.m. It got closed at. And that delta was 14 delta. So this was all the overnight action. None of this was available at the time when I was in it yet. Nope. Let's zoom in again. What was it like? To get a little content. All this volatile action came after some economic news was released. Yeah, again, it was before the 8:30, 9 o'clock type of news. It was pre-market earning news. And I got in at 5:48. So looking here on the 15 minutes, you see how I did the trade. Let's open this up. And I'll show you why I chose this. Getting my setup. Where was it? Somewhere. There we go. Far away. And there we go. So my entry was here. Right here. During that green candle. My bearish entry. The reason why, all this overnight price action, I'm seeing consolidation here. Trending down. Retracement. See this consolidation, retracement? When this impulse move came down here, these are 15-minute candles. This impulse move came down. We never even completed the top of this test of retesting of this consolidation, leaning more bearish bias I was coming into the pre-morning session or overnight session. Then when we had this impulse move down, a retracement, what do I like? Consolidations. I'm seeing these candles. The momentum's not continuing. All it did was retest this and went a little bit higher to fake out people buying the long side. Something, yeah, there might be a short squeeze here. I'm not going to be the knucklehead on the bullish side. I'm going to look on the bearish side because these people buying up here, the momentum's not continuing. Short squeeze. If they're wrong, they're going to be selling in a heartbeat and they'll lose a lot of money. So boom, this inside candle formed. When that got done, let me trend down a little bit more here, right here. That got done. I entered my bearish when we slightly broke below that. And then as we're getting closer, or I'm already in the trade, impulse moved down, broke below this consolidation. Continuous going down. Let's see where my trade got closed. Again, the momentum went in my favor. Closed the trade. Well, there was economic news again. Stocks had earnings, pre-market. The banks, they were bad news. Bad enough to make the market sell off fast. Again, before the cash market opens. This was all before 9:30. And my trade closed for 50%. I was a happy camper. Yep. So what happens if I stayed in this? Well, if I stayed in it all day to expiration, I would have done the max, keeping the max amount of money. But, and the good thing is here, it did not get tested my short strike. Thank goodness. Yeah. A little bit here on the options. Here you have an option chain, SPX, right there, and that parentheses 0, meaning those options expire the same day. That's for the XPX. The next one will expire 17 January. That's in 4 trading days. Let's queue up, and these other ones, see, like that. So when this gets to 0, because this product right here, SPX, has options that expire every day. That's what I like about that. Where some stocks don't. Let's queue in the ES. The ES also has options that expire every day. I also like that too. So here's the option chain. Yeah, slightly different the way it's formatted. See, these all say January and then the year, but they tell you how many trading days to expires. Well, again, it's formatted different because different exchanges. And this exchange, the futures these trade on, their fees are higher. Not talking about the commission from the broker. No, the exchange fees are higher. Again, we'll go here. You see how they have the calendar date to the left, the month and the year. Yeah, they make it a little bit complicated. Shame on them. I'll leave it there. I'll end here. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.